So that's the mining agency operate after verification. Well, at the same time, stress that they do want to stop all spills, and that's why it's going to happen just after the general election. We're going to hear how much water bills are going to go up because the water companies want to invest in excess of £10 billion up to 2030 to try and stop this.
Thanks very much, Jim. Paying out a record-breaking amount to the company's boss, Elon Musk. Will Bain has more on that, along with the rest of today's business news. Morning, Will.
Morning, Martha. Morning, Michelle. Yeah, this is quite the potential pay packet for Mr. Musk. He received up to a record-breaking $56 billion payout. He also, the shareholders also agreed to move the firm's HQ to Texas after that. Georg Al, former director of Western Nevada, Tesla, CEO of Praise and Microsoft. Later in this piece is with us as well. Georg, morning.
Morning.
First of all, $56 billion up to, just explain what it's up to.
Well, the pay award that he was given in 2018 required him to hit a series of goals, which involved stock price accumulation from 50 billion up to increments of 50 billion all the way to 650 billion. And he also had to hit revenue and EBITDA goals, so profit goals. And in each case, he needed to sustain that performance over a 6-month period before that particular hurdle would then result in some additional stock being granted to him.
This all came, of course, after a court in Delaware had blocked this particular pay, and hence the vote was tied to this as well about moving the HQ to Texas. What did you make of both of those decisions, the amount of potential pay and that move of the HQ?
Well, I think they're slightly separate. The move of the HQ seems to be a reaction to the court's decision. The court's decision, of course, taken very much in retrospect. I think in 2018, and I'm a CEO now myself, so if someone had said to me, Georg, we'd like to structure your pay so that you get no salary, no bonus for 10 years. To earn anything, you must double the stock price, and to earn your maximum comp, you need to 13x the stock price. You also need to hit revenue and profit goals, which have to be sustained. So, you can control those things, but you can't always control the stock price. So this is not a plan that he could have gained, or that if I was in his shoes, that I would feel I had complete control over. I think if I came home and said, this is the deal I've agreed with the board, my family might say, that doesn't sound very good. So in 2018, the general reporting and the general consideration of this pay package was that he was insane to accept it, and the board has struck a very good deal. And yet, of course, with retrospect, we see what's happened, and it has this simple math there. It turned to be an extremely generous payback indeed.
It felt like a kind of fascinating split as well within this vote. It felt like, and you tell me where I go wrong, but the bigger institutional shareholders, investment firms, weren't very keen on this, and that actually those smaller retail investors, what the US call mum and pop investors, people like you, perhaps buying stock and shares, were keen on this.
Well, I think there are probably examples of institutional investors on both sides. They haven't disclosed the voting split this time around yet. I know in this first vote it was roughly 3-1 in favour, so there would have been some institutions in that as well. I think some of the institutions who voted against first time around actually voted against because the general feeling at the time was that it was impossible for him to hit these goals, so would it actually be sufficiently motivating? And of course, an investor at the time who felt that they had the foresight to see how this was going to go and they didn't like how the number would turn out would probably rationally have been best served buying more stock. But I think it's a little bit of an argument made in hindsight.
I mean, to you, is it worth it?
Well, so there's two ways to think about that. If I was an investor, and full disclosure, I own roughly £6,000 in stock, so that is that's there. But if I was an investor who put a substantial amount of money into this in 2018 and had held it throughout the period, I'd be very happy because I would have seen anywhere, depending on the day, between 13 and 16 times my money back, and that's a very, very good return. So on that basis, as an investor, would I be happy with performance? Yes. Is it easy to say that any human being is worth 500 million, 1 billion, 5 billion, 50 billion. These are very large numbers to ordinary people.
And does it give him kind of carte blanche now, more power, I guess, to shape the direction of Tesla? I reference the company you work at now, working in AI, because that's precisely sort of what seems to want to shape the next phase of Tesla. Does this make him more powerful, I suppose, in what direction he wants to take?
I think it gives him a very strong validation that the shareholder base support the board who support him, and he's always been a very powerful figure. At Tesla, of course, he doesn't do it all alone, but he definitely sets the agenda, he sets the pace, and he is a relentless person to work for, there's no doubt about that. So yeah, I would say it probably validates his approach, and he's very ambitious to Tesla himself. They're trying to build humanoid robots now, so that's the next big market for them as well.
Guillaume, thanks so much for your time this morning. Guillaume Galder, former director of Western Europe at Tesla Motors. Sweta Ramachandran, fund manager in global equities at Artemis Investment Management, is with us as well. Sweta, morning.
Morning.
You are an investor. What was your reaction to that pay deal?
I guess, similar to the former speaker, it was struck in 2018 when the targets that have since been achieved by Tesla seemed unachievable. The company has quintupled revenue since then, gone from being loss-making to profit-making, and the board at that time, with Mr. Musk's input, designed this pay package. So I guess in the words of the chairperson, a deal is a deal, and so the vote of the shareholders appears to be somewhat definitive. The issue the Delaware court had was on two fronts. Firstly, the absolute amount of the pay package, but also perhaps the lack of disclosure around the targets to shareholders. So that aspect of it, and the fact that the board may have had undue influence from the CEO, may still be a factor that could play out in coming months.
Right, so it's a potential hurdle for us to keep watching. On the stock market here in the UK, looks like potentially more consolidation on the way in housing, right? Bellway seem to be moving closer, edging closer to an interest in Crest Nicholson, that's been a struggling house builder.
Indeed, and Crest Nicholson's results yesterday really highlighted the troubles facing the housing sector, which is this sort of combination, the double whammy of weakened demand as a result of the interest rate environment, but also their own increased remediation costs due to their legacy site issues. And in some ways, Bellway saw this as a good opportunity, given the distressed valuation, to extract compelling synergies in this industry. But of course, that has been thwarted so far, and perhaps a formal offer will be forthcoming.
Another firm with slightly sort of distressed past, or certainly recent past, has been Superdry. So we've got shareholders getting a vote on the latest restructuring plan.
Yeah, the shares are down 97% in the last 5 years. The industry has been going through a slowdown, but even in this context, mid-market retailers such as Superdry have been particularly badly affected because of the cost of living crisis that has been affecting consumer demand, and also their own product and design and going a little bit out of favor as well, combined with very high fixed costs on their rental estate.
Peter Williams, former chairman of Superdry, also former chairman and CEO of Selfridges, man who knows the retail industry well, is also with us. Peter, morning.
Good morning.
This restructuring plan then that shareholders will get a vote on, they've already approved, haven't they, some elements of it, rent reductions, delisting from the London Stock Exchange, that kind of thing. What do you make of the plan as a whole?
Well, I think it's okay insofar as Jeffrey is, because obviously it helps try to fix its balance sheet, as it were. But the previous speakers just said, one of the problems is brands going out of fashion, and the real issue for dress, it is its product mix,
Peter, just struggling with your line a little bit, just see if we can clean it up a little bit. Sweta, just take on that point that Peter was making there, and that you made there as well, about the brand itself, because you come from the founder of Superdry. When this was put to him, it was put to him by the BBC, by my colleague Rory Jones, that perhaps the brand wasn't cool anymore. He pushed back pretty hard on that. What do the numbers tell us?
The numbers would suggest that they are definitely having a problem at this particular time, when on the one hand there's a huge polarization where the very high-end brands are doing fine, and then at the low end you've got Zara, for example, that's doing quite well. The mid-market really is struggling, and in fact, Mr. Dunkerton's own criticism of former management was that they had narrowed down the stock quite substantially, and he wanted them to expand more into the hoodies and more designs that they were known for. that's also one of the reasons why the lack of variety and newness has also been what's kept the brand struggling.
Peter, your take on that?
Yeah, no, I agree with all of that. I mean, I helped Julian with his campaign to return to the business, and I think that was a sensible thing at the time, but it was on the proviso that as it were, we got somebody new in to run the business. I think that if you look at these fashion brands like Ted Baker, French Connection, and Superdry, the founders do a fantastic job to create something from nothing, to take it to a sizable business. But then you need somebody else to take it on to the next era. And, that hasn't happened yet at Superdry.
So you think there's a need for fresh ideas, do you?
Move on.
You think there's a need for
Yes,
fresh
I think
ideas?
the product got a bit. Yes, I agree. A bit